Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, December 11th, Monday, starting a week very important. This week is packed with economic data to the top. Tomorrow, CPI, we have PPI on Wednesday, also interest rate decision, FOMC, also Jerome Powell speaking, also on Thursday, retail sales, and Friday, we have quadruple witching day in which 4.5 million of options expired Friday. So this week is the week in which I think most probably is the most important of the year, because coming into the end of the year, what happens this week will most probably carry over 2024. So this week will test your patience, your discipline, and your risk management. Today, Monday, we have nothing. The only thing that I will watch is the 10-year not auction. I'm not going to trade this at this hour. I already took some trades in pre-market and one short a couple of minutes ago, and I'm done for the day. But today is just choppy. We are chopping around, we try to go higher and we reject it. That's the short I took, and my signal for most probably wait for tomorrow CPI 1 hour before the open. So without hesitation, let's move into the chart. If you are trading futures, you have to think about this. This week, this Friday, and most probably tomorrow, it's rollover. We will carry over from December, that is the NQ seed, to March 2024 NQH. Volume already confirms that there's almost 1/3 more volume on the March contract than on the December. So if you are trading NQ seed, most probably today is the last day you should be doing that. So no seed, NQ seed, yes, NQH for March 2024. So that being said, I'm already watching some levels on the March, and the most important one that we took today, it's the liquidity up here at, let's see, it was up here. It was 16,410. So that's the short I took, but first let me just put in some context for you. So we got the unemployment rate last week with this week, this bottoming tail that we went into the close quite bullish on Friday. So we respected this 4 hour fair value gap. We have another two down here, the 1 hour and the 4 hour. So the first thing that I was watching today, and you can check my Saturday's weekly recap video, is we need to hold this. I want this 4 hour fair value gap to hold to provide me with some opportunities. The draw on liquidity I was waiting for is up here. That already happened. So if you are long, I think today's target it's already taken. So if we go to the 1 hour, you can see how the 4 hour got respected here, and we close at the highs on Friday, establishing this blue dot line that is last week high. In pre-market, we tried to hold, we held, and in pre-market, I took my first trade long. Why? Because this is the difference between a good long on liquidity grab and a bad long. Let me explain you. I was watching this at the London Open. This is not the London Open, but we were almost approaching that, and we took this liquidity but without a big push. The retracement, the push, the movement to the upside was not really convincing, so I didn't take any trade. It left this kind of fair value gap that worked, but I'm mostly watching this, the price action when we take the low. So I didn't take this. But again, I was watching this low, pre-market low, usually provide good long entries for a bullish day. I thought, okay, I just missed the long, but look at this. Market structure change, short up here, and I was saying, okay, perhaps we're moving towards this liquidity on pre-market low, and that's exactly what we did. We took the sell side liquidity down here, and this is what I want to see. This displacement, this fair value gap, entry long, stop at the lows, targeting this week. Just this for a nice long. I don't want to just completely go up here based on the fact that this week you have to be really picky. You have to be managing your positions, babysitting every single trade that you do, and managing your expectations. Excuse me. So my expectations were just, I want to take profits up here. And that's what I did. So basically, this nice long 18 points, it's enough for a quick scalp. Managing my risk reward ratio 2.77. This is the things that I want to see. So then I went and waited into the open. Into the open, we took pre-market highs up here, and also Fridays. Let me put a 15. We took Friday's high, this liquidity up here, and I was just waiting. Are we going to just push this liquidity up here? Yes, we are going to do that. We did that. We took both the daily and also this week that we got on Wednesday last week. Remember that this is a newer contract that we have to recharge again. And this is where I went short. I think a lot of people were thinking, oh, nice pullback, let's continue higher. This is where ICT concepts shine. We took the liquidity up here, we put a fair value gap in here, market structure change, it's all chart here, guys. It's all chart here. And I took the short this with the stop at the highs, and I was watching these two. This and this liquidity. So I think this was the proper one, and we did it. I was trading my stop to this one on this week. So that was risk free, and I took it out down here, and we are just chopping around. Look at this move. This is not convincing. When you jump like this, today's look at the range and the value. The point of control is right at the middle. So we have no edge. How do you know where the market wants to go? And today is no news Monday with a pretty important action of the 10-year at 1 p.m. So be careful with that, 1 p.m. So I'm not confident enough to continue trading. I took two trades. This short was 43, that's 800 and something, plus the other long that is 18. So 18 plus 43, it's 65 almost. That's more than 1,000 in one day. I mean, for Monday, no news Monday, just I'm quite happy. So there's nothing for me. There's nothing else for me today. Dollar is quite strong. Yields are in the green. And look at the individual stocks. Apple, Microsoft, Tesla. Everyone is in the red. Tesla -2, Google -2, Nvidia and Meta -3. I mean, this is, I don't know why the Nasdaq is even green. The S&Ps are flat, 0.01, and they also took liquidity up here. And you had the same entry up here for a nice short, targeting liquidity. So the same setup in both indices. I mean, I was bullish, but this kind of price action does not provide me with enough confidence and conviction to continue higher. We already took the liquidity that I was watching. I took the short for a retracement. I don't know if we are going to see lower, but I just don't care. Because the week is packed with fundamental news. Tomorrow we have CPI. On Wednesday we have PPI, and we have FOMC interest rate decisions, and also the economic projections from Powell. I mean, that's insane. Thursday, retail sales, claims, and on Friday, let me tell you, we have also quadruple witching day. So for the S&P 500 on the 15, look at this, 6.2 million of open interest. That's insane. The stock price right now is 460. The max pain is 441. Oh boy. So be careful, because this week will be highly manipulative. You have to really take those gains. This week is your week, is that week to really take gains along the way. Don't trust the market, trust your risk. Cut the risk, cut the losers, take the profits. This week is for you to really experience high volatility and high manipulative market. So be really, really careful. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I also upload weekly recap videos like the last one on Saturday. If you didn't check that out, please check that out. It's really interesting. 25 minutes of pure useful information for you. So thank you for your time. Remember that more than ever this week, discipline, patience, and risk management will be your key for your success. Stay safe, everyone, and see you tomorrow.